Imagine paying your mortgage faithfully for 20 years, believing your home is not only your greatest asset, but your family's safest place, only to discover your insurance company won't cover you anymore. Imagine watching wildfires rage in the distance while holding a letter that says, "We will not renew your policy." Imagine being told that the home you've built, cherished, and invested in is now considered uninsurable. What would you do then? How would you protect everything you own when even insurance turns its back? California's wildfire crisis is no longer just about flames devouring forests and neighborhoods. It has become a story about financial survival, about the growing impossibility of protecting homes in a state where fire season is now a year-round reality. Insurance, once a safety net, is slipping away for thousands of Californians. Families are waking up to find that not only are their lives at risk each summer, but their financial security is disappearing too. The first question we need to answer is why? Why are insurance companies leaving California or drastically increasing their premiums? The answer lies in the scale of the disaster. Wildfires in California have become larger, hotter, and more destructive than ever before. In the past decade alone, fires have consumed millions of acres, destroyed tens of thousands of homes, and caused tens of billions in damages. Each time an insurance company pays out billions for lost property, the risk of insuring those regions grows more unsustainable. For insurers, it comes down to simple math. If the losses keep exceeding the premiums they collect, staying in California becomes a losing game. Some of the largest companies, State Farm, Allstate, and others, have either paused writing new policies or pulled out of high-risk areas completely. That means thousands of homeowners are left scrambling, sometimes with only one option left: the California Fair Plan, a state-managed insurance pool that provides very limited coverage at a much higher cost. But this isn't just about companies protecting their bottom line. It's also about how climate change is reshaping risk. Fires are no longer occasional disasters. They're predictable and frequent. Insurance models, which used to rely on long periods of calm between disasters, no longer work. When fires return year after year, there's no time for recovery, no chance for insurers to balance losses with stable years. The system itself is breaking under the pressure. For homeowners, the consequences are devastating. Imagine trying to sell your house without insurance. Buyers won't come. Imagine trying to refinance your mortgage. Banks won't lend. Even if you want to stay, living without insurance means one bad fire could wipe out your entire investment and leave you with nothing. Suddenly, the American dream of home ownership turns into a nightmare of financial vulnerability. Some families try to adapt. They clear brush, harden their homes with fire-resistant materials, and hope it will lower their risk rating. Others pool money into community fire prevention efforts. But even with precautions, insurance companies see the risk as too high. The problem is systemic, not individual. A single homeowner can't change the fact that the entire region around them is prone to disaster. And here's the deeper issue. When insurance disappears, inequality grows. Wealthier families may be able to self-insure, setting aside funds to rebuild if disaster strikes. Middle-class families, however, don't have that cushion. They face a terrible choice: pay exorbitant rates for minimal coverage, live uninsured, or leave California altogether. For many, migration becomes the only option. This is how wildfires are fueling not just destruction, but also social and economic shifts across the state and beyond. Communities that lose insurance see property values fall. As more people leave, neighborhoods hollow out. Schools lose students, local businesses lose customers, and the very fabric of community life unravels. What began as a natural disaster turns into a social one, reshaping towns and pushing families to the edge. At the same time, pressure is mounting on state officials. California has tried to intervene, freezing insurance rate hikes, encouraging more companies to stay, and expanding the Fair Plan. But even these measures feel like band-aids on a much deeper wound. Unless the root causes, rising temperatures, drought, and unmanaged forests are addressed, the risk will only grow. And insurance will keep slipping away. This raises another uncomfortable question. Who should bear the cost of wildfire risk? Should it be individual homeowners forced to pay skyrocketing rates? Should it be the state using taxpayer money to subsidize coverage? Or should it be corporations whose emissions contribute to climate change, footing part of the bill? At the moment, homeowners are carrying the burden almost entirely, and it's pushing them past breaking points. It's not just California either. The crisis unfolding there may be a preview of what's coming to other states. Florida has already seen similar issues with hurricane insurance, where companies have pulled out due to repeated billion-dollar disasters. If extreme weather continues to intensify, more Americans in more states will face the same reality. What happens when your home becomes uninsurable? The psychological toll is just as heavy as the financial one. Living in a home you know might not be protected creates constant anxiety. Families worry about evacuation plans, about where they would live if their house burned, about how they would start over without the backing of insurance. Children grow up with that fear woven into their lives, and communities begin to feel like they're living on borrowed time. Some argue that California residents should have expected this, that choosing to live in high-risk areas comes with responsibility. But the truth is more complicated. Many of these communities existed long before wildfires became this destructive. People didn't move into danger, danger moved into them. Climate change altered the risk landscape faster than most could adapt, leaving ordinary families trapped in circumstances they never imagined. There's also the reality that not everyone can move. Jobs, family ties, financial limitations, these all root people in place. Asking them to simply walk away ignores the complexity of human life. For them, disappearing insurance feels like abandonment. It feels like being told their lives are not worth protecting. Yet amidst this grim picture, there are sparks of resilience. Some towns have banded together, investing in shared fire prevention infrastructure. Non-profits and local governments are experimenting with community-based insurance models. Scientists are developing new materials and building techniques that can withstand fire better. These solutions offer hope, but scaling them to the size of California's crisis remains a daunting challenge. The bigger story is this. Insurance isn't just a contract between a company and a homeowner. It's a measure of trust. It's society's way of saying, we've got you, even when disaster strikes. When that trust collapses, it's not just a financial issue. It's a social contract breaking apart. Californians are now living in a world where that safety net is fraying, where trust is being replaced by uncertainty. So what happens next? Will California find ways to convince insurers to stay? Will the state create a new model of shared responsibility? Or will more families pack up and leave, turning wildfire zones into ghost towns? Each option carries profound consequences, not just for California, but for the rest of America watching closely. Because in the end, this isn't only about one state. It's about how we all adapt to a world where disasters grow stronger and the systems we once relied on, insurance, infrastructure, government, struggle to keep up. California's wildfire insurance crisis is a warning shot. It tells us what happens when nature and finance collide, when the cost of safety becomes too high for systems designed in a calmer era. And for every homeowner still living in wildfire country, the question is immediate and personal. If your insurance vanished tomorrow, what would you do? Could you rebuild on your own? Would you risk living uninsured? Or would you walk away, leaving behind not just a house, but a life? California's fires may burn forests, but their smoke reaches into every corner of American life. Whether through higher food prices, migration patterns, or changing financial systems, the impact will touch all of us. That's why this story matters, even if you've never seen a wildfire up close. So as you think about your own life, ask yourself, what would it mean if the safety net you rely on suddenly disappeared? How would you protect your home, your family, your future? These are not abstract questions anymore. They are the new reality of life in an age of escalating disasters. Thank you for watching. If this story gave you a new perspective on California's wildfire crisis, make sure to subscribe to Crisis Lens for more investigations into how disasters are reshaping our society. Like this video, share it with others, and join the discussion in the comments below. What would you do if your insurance company walked away from your home?